All righty, welcome to our second Wednesday Wisdom, our first live. So be nice to us in case we make any mistakes today. But at this point, we're going live on several of my social media platforms, and it'll be posted at a later date on Jonathan's. But first, let me introduce myself. I am Michael Loftus, Loftus Wealth Strategies, Wealth and Wisdom TV, based in Delaware and also Florida, a financial advisor for those who didn't get the update last week. And my friend Jonathan. Jonathan, go ahead and say hello and introduce yourself.
Hi, my name is Jonathan Bartholomew, and I'm a owner and registered investment advisor of Rockridge Wealth, based out of Syracuse, New York. Been in the business for 20 plus years, and looking forward to the rest of the show.
Well, awesome. So each week, or not each week, we're going to do this every couple weeks. So we'll make sure we just make sure you are liking our various pages, and we'll be sending out information to make sure that you're aware when we're doing it. But looking for 2 weeks out from today. But on the weekly topics, when we go through here, we're going to keep it pretty simple and the same. And we're going to talk about really just three topics: macro. What's macro, right? A lot of people don't know that, but both of us are big believers in macroeconomics, data digging, as we say. Let's get technical. We're going to look at those charts because, boy, there's a lot of things going on. We picked a good day, a lot of volatility, a lot of things happening in some charts today. And then each week we'll also focus on some retirement tips, ideas, whatever comes about, questions from our various viewers, etc., that hopefully can help you on your retirement journey. So first up, let's go ahead. Jonathan, here's our week here on macro. First, what is macro for those who aren't aware? And any thoughts on what's coming up this week?
Yeah, macro is literally the data, right? Like, is the economy growing, slowing down, and here on the screen you have you know various inflation metrics, energy inventories, durable good orders. There's all kinds of different data that go in to try and allow us to get a pulse on what's happening.
Correct. Yeah, and I think that the only thing I'll add is obviously this comes out all the time. And when we look at things, we're looking at it from a rate of change. But the one thing I'd be
Mhm.
careful of sometimes when we get new data points, the mainstream media, and I mean this not in a political way, in the financial way, tend to overblow things. Yesterday is a real good example. We came out with the services PMI, and it was up, and everyone was so excited, right? The problem is what they didn't talk about are those other items. Okay, they're actually down on the same day. So let's focus on what's up, not tell anybody what's down. And you could look at the numbers. I'm not going to dig too deep in it, but Fed regional surveys for Philly Fed, Richmond, and you look at some of these numbers, right? The key I see is 8 month low, 6 month low, 25-month low. Okay, so that's what we look at from a macro standpoint. But the bottom line is it's slowing. Pretty much all of our macroeconomic
Mhm.
data at this point has slowed, is slowing. There's really nothing that looks too positive except probably one, which would be employment, and we addressed that on the last show. So, not a lot this week on the macro side of things, but the big is going to be what is going on in the markets and some of these charts. And it all started last night with Google when they came out with their earnings. So, Jonathan, I'm going to pass this to you and let you offer your thoughts on what you see and what happened to Google and how did it affect the markets.
Yeah, I mean, so Google's numbers weren't terrible. They had one area. I know you and I were talking about it before the show. One area on the cloud side that was down, but boy, it wasn't hot enough for where their price is, right? So Google just tanked today and brought the whole market down with it, and there was a lot of bloodshed out there today in the markets.
Yeah, I think the only thing that I will, talk about here, and I hit the wrong button for my charts. Let me go back to this one. When you see something like that, for folks who aren't aware, and the price drops like that, that's called a gap down, and that's a big gap, right? 9.6%. Wow. That's a big move for a big company. So, real interesting at this point. When you look at Google, it's still in an uptrend. You can see how it's pointing up still. It did not only break its 50-day moving average, it broke its most recent up move. So, at this point, this is one of those stocks our research company had a buy on. I personally don't own it for our accounts or myself.
Hmm.
I was waiting for an entry, so I'm going to look to see if this might be an entry as we go forward. And also, it depends on how the market goes overall. So, this is a big week, and I think as we're talking, we're going to get the numbers for Meta coming out. But the other one, and the reason these are important, right? Magma, right? Or the Magnificent Seven. I mean, just the four companies between yesterday and today represent 20% of the S&P from a weighting standpoint. So how about Microsoft? What happened here, and what's the difference?
Yeah, I mean, Microsoft, the market really viewed their earnings report last night as being positive. So on a day when the market just got crushed, Microsoft ended up 3% on the day. In fact, it was up higher first thing in the morning, but the market just there was quite a bit of pressure on the market, and that dragged them down. They still ended up 3%, but not as high as how they started during the day.
Mm-hmm.
And I think you're still seeing, this is just my opinion, this wouldn't be in the chart per se, but I think you still have a lot of FOMO in this market around AI. Microsoft with ChatGPT is the head of that, maybe with Nvidia, and so there's people that are buying and chasing it at I would say obscene kind of valuations and prices, and so you still see that here with Microsoft, even though I honestly, there wasn't a huge difference between their earnings and Google's in my view.
Well, it's interesting what Google got hit for. Microsoft had the same issue, but it really wasn't even brought up. So, according to our analysts, it's going to be a couple quarters before we see that. So, the only thing, I'll go a little bit deeper here when I see that. So, here's the opposite, right? You had a gap up. The other thing is, from a perspective, you could look at this as maybe reverse head and shoulders from a technical standpoint, which is bullish.
Hmm.
Okay. And that's your trend line. And, pretty much went above the trend line. So let's see what happens here as we go forward. Okay. Are they going to be able to continue some strength? They're a consumer company, right? In a lot of ways. So we'll see what happens as we go forward. But again, not an owner here as well. But, the overall effect, now here's the NASDAQ, and got a little ugly here today, didn't it? So what do you see here, Jonathan?
Yeah, the Nasdaq looks like it's breaking down, and the only lifesaver for the Nasdaq has been mega cap tech, right? Your top five, six, seven companies in the index have held that thing. If you eliminated those, this index would look atrocious.
Yeah.
And it definitely, as you pointed out right on the chart there, you got a trend lower here since the beginning of August with lower highs, and particularly with today and that candle there at the end of your chart, lower lows. And that is not what the market wants to see. And if these mega cap stocks can't hold up, then there's going to be significant selling
The
pressure.
whole market goes. I mean, it's been held up by the Magnificent Seven,
Hmm.
Magma. So I would agree with that. And you see here, I had a trend line that I was looking at that it broke. The only thing I'll point out is down the bottom of the chart. That's all those companies above the 200-day moving average. And you only have 20% of companies in the NASDAQ above the 200-day. That's about as weak can get. So
Hmm.
a lot of struggle on this one here. I'm not going to show this chart, but you mentioned AI. A big part of AI with the semiconductors, and boy, they got hammered today.
Hmm.
3 to 4.5% on the downside on several of the big names. So we're going to really continue to follow that. But we might have some thoughts of maybe things being a little bit oversold. So let me go ahead here and bring up the The S&P chart, I'm going to see if we can mark this up as we go forward. Let me see. Here it is right here. So S&P, let's see what you see, what I see, and what are your thoughts?
You know, intermediate term and longer term, I'm definitely a bear. I would say, with the sell off that we've seen over the past couple of weeks, I do think that we're in oversold territory and very likely the low end of the range. I would uh, I would like to see, if we're, if we got a bearish portfolio, then ideally what we'd like to see is a bounce here to another lower high and and then continued selling pressure. And I think the likelihood of that is probably quite high.
Yeah, the only thing that I'll add is I look at the chart. I'll bring up my tools. Like I said, same thing we saw over there, right? Lower highs, lower highs, lower highs, right?
Mhm.
The big thing was this, right? That's your 200-day moving average. Pretty big move to the downside on the 200-day. We bopped it the other day. We'll see what happened. Another big level of support. You can't see the number, but where I'm drawing in there, that's your 4,200. You broke that today. But the other thing is, when I look up top, this is called relative strength, RSI. Are we at that point where we're actually oversold? And I know you made some moves into the close. I
Mhm.
made some moves into the close. So short term, uh, any thoughts on direction? And hold on, before you go there, want to make sure everyone knows compliance hat. These are not recommendations. We do not know your story.
Mhm.
These are just some things that we're talking about from a big picture. So short term, you kind of mentioned it. What do you think in any positions that you're taking here?
Yeah, short term. I actually today covered most of my shorts, and we run long short, and so most of my shorts were covered. That is a short temporary strategy because I am bearish on this market. I think we had lower, but as we've seen this sell off and we saw that intensity really pick up, today, and so actually now we're actually playing for a short term bounce, and we went long, and so we're long. I added to energy positions. We're still long. I didn't add today, but to uranium, and I even added a a buffered S&P that offers some potential downside protection if I'm wrong, and added that exposure on the long side as well.
Yeah, so I would agree with some of that, and I believe I own. So energy is one of my top holders. I'll call it inflation assets. I've got upwards of 15% in inflation assets right now, so I did not add to my positions. I feel
Hmm.
from a risk adjusted basis, I'm good on that. I
Hmm.
did add, like you said, I did add to several. I did add to uranium miners last week. That was a new ad, I
Hmm.
should say. So I did that. Now I took a position also for a short-term bounce, for an upside move. Sold all my sold all of my inverse or shorts, as you would call them. So let's step back for a second, and why
Hmm.
don't you? Because I think we explain what we're doing here, short term, because you're really oversold, is what we're saying. So let's get rid of those hedges, shorts, and look for a move to the upside. So explain to our viewers what and how do we as advisors, because options are tough in clients. How are we doing these shorts?
Yep. So typically we're using what's called an inverse ETF, which is a synthetic way to short the market. And internally, that ETF is doing the shorting, and so that your client doesn't, or you and I don't have to do it literally. When you do it literally, you're literally just selling shares of stock, right? You're
Mm-hmm.
borrowing shares and then selling them is the pure way to short. And so we're doing it synthetically through an ETF that does that for us, and that makes it easy to place in client
Mm-hmm.
portfolios to get the short term effect of what you're looking for. those
Yep.
positions can degrade with time. So I know you and I have talked about this a lot. We don't tend to hold onto those inverse ETFs for long periods of time. We prefer to trade them because they can degrade, and that gets very complicated as to why that happens. But there's costs associated with shorting, and so but they work very well in a long short portfolio, and they can actually, if used appropriately, they can lower risk. They can
Yeah.
increase risk if used inappropriately, but they can help
Sure.
lower risk too.
Sure. Yeah. So I would agree on because the idea of getting them in and out, right? So now I'm showing here on the screen SH. Okay, SH is inverse the S&P
Hmm.
SPY S&P ETF. Okay,
Yep.
so as you can see, these last few days, as the S&P's gone down, this in fact has gone up. Okay,
Right.
so for me, again, I'm in the same book as you now. I had owned quite a bit, and for quite some time. RWM was probably my biggest one, which is the
Hmm.
inverse Russell 2000. And as you can see, it's had a huge move over the last several months for a couple reasons. It is very heavy in regional banks. It's
Hmm.
also small companies, a lot of zombie companies. So had a great run in this. And like you, I sold all mine the other day. Wish I had them today, but wish I sold them
Hmm.
today. But I did sell them 2 days ago going into earnings. I felt that was best for me. But
Hmm.
we'll see where it goes from here. I think just like the S&P was oversold, now you look at this and you see 70 RSI. This is now overbought. So that's
Right.
why you kind of, in the long short, you buy or sell according to where we are in the market. So this is a nice way to do that. As an advisor, where we're not taking on you don't want to be doing options. It's too difficult to do. And here I'm showing you the IWM chart. This will be my last chart. And this is basically the inverse, right? So the RWM was inverse of this. And look, I mean, this is, people don't talk about this, but the IWM Russell 2000, it's down, right? Over
Hmm.
30%. I mean,
Yeah.
even more because at an updated end of close, we're down 17, 18% just from before, from August time frame. But this is the other part of the market, right? So it's crazy that no one's talking about this, but this is an important part of the market here as we go forward. And I'm looking over to my screen because I got a notice that Meta earnings just came out. And it's saying, so we're hot off the presses here, folks. How about that? Cutting edge we are. Um, so Meta, let's see. Let's see, boy, it's taking a while. I have another iPad over here,
I have it
and
up
it's
almost
it's
5%.
yeah, it's up 5% after market. So I don't have the details, but it looks like a pretty decent earnings, which is not surprising. One of the companies we did anticipate, and full disclosure, one of the companies that I hold as well. So,
Hmm.
all right, so let's move on. I think good session there about some of the technicals, because when you look at both of our processes, even though we apply it differently, right? Because you're up north, I'm down south in Bethany Beach, right? But
Hmm.
we apply it differently. We take that data, we apply it differently. That's what's good about the show. We might have different opinions, although we're doing the same thing, okay? And in this particular case, we both follow macro, but then the charts are momentum, right? That's the signal. So if the signal strength looks good, we're going to go ahead and make sure that we follow that signal. So that's
Hmm.
exactly what we do. So next up, let's get into the retirement section of our overall program here on our macro markets and money. Okay, so money's going to be about retirement. So today we're going to do money mistakes you regret and how to avoid them. So number one, I'm going to put out there, I'll let you run with it first. I regret taking premature IRA withdrawals.
Yeah, there's a lot of people I've met over the years that have done that, and particularly when they were younger, wanted access to the money, and on the one hand, I would say if it's in the past, you can't change it. So lingering on that doesn't help your future financial situation. So, um, you know, uh, definitely I would avoid taking premature IRA withdrawals. For someone that's already done it and made the mistake, I would say learn from it,
Yep.
right? Like
Yep.
we've all made financial mistakes. Every single one of us has done things financially that we regret, and hopefully we learn from it and get better so that we don't do that again. And I would recommend that people learn how to, um, when you do need to take money out, there are better methods than pulling money out of an IRA early,
Yeah.
right? Like,
If yeah.
it'd be better to do like a 401k loan out of your retirement account.
Oh,
Much
hold
better
on
option.
about that one. I don't know about that one. See, this is where we might disagree sometimes,
All right, fair enough.
right?
I'll
Yeah,
ta-
I
I'll
mean,
bite.
yeah. So the only thing that I'll add is this is why we do planning with clients, right? I mean, you have a financial plan done before you retire, and we can go through this and come up with a game plan. We both of us have the software to do that.
Hmm.
Where's your money? Because everyone, when you're preparing for retirement, you're very good at saving, saving, saving. But then when you get to retirement, where do you take it from and how do you do it in a tax efficient way? Right. So I think that's where I would say, you know, have a plan in place so you don't have that regret as we move forward, which there I think we can agree on, right?
Sure, sure.
Okay.
I guess I was referring to the situation where somebody's financially between a rock and a hard place and they don't have an option. Where are they going
Okay.
to pull money
Okay.
from?
Fair enough.
And that's where I would say, well, you can pull it out of an IRA and pay taxes and penalties, or you can
Sure.
loan yourself the money and without any taxes or penalties, and the interest that you pay is actually paying yourself. And
Hmm.
so I wouldn't recommend doing it unless you had to. Like you said, much better to plan ahead and not have to do any of that.
Yep. So, just real quick, for those who are watching right now, I'm Michael Loftus, Wealth and Wisdom TV. I've got a good friend, fellow advisor, Jonathan Bartholomew, who's out of upstate New York. A new program we have here, we're going to do every couple weeks, talking about macro markets and money and retirement. So, thanks for those. I got a thumbs up from somebody, Jonathan, just so you know. But so let's look at the next one. I retired too early. Now it's costing me.
Mm-hmm.
Okay, so a lot of factors go in that. We don't know the full story here. This is just a question came in through one of my channels. So what are your thoughts on that one?
Yeah, that happens. People, have this huge push and huge goal to retire early. And, that could easily just go back to what you just said, which is that's why we want to do the planning up front so that we know how much you're going to spend if you're retiring early to make sure that you've saved enough and that you have the right income. If you're already there and you've made the mistake, and that's where I would say you really got to balance your lifestyle, and there's hard choices that sometimes people have to make that we talk them through. and
Yep.
and do you can you control your expenses and find a way to responsibly bring them down, and maybe there's even a way to increase income.
Yep.
And those aren't fun discussions, but they're the levers that people can pull.
Yeah, so the only thing I'm gonna repeat myself and just say is why we do planning, right?
Hmm.
Uh, in this show, we talked about macro, we talked about the markets, but both of us, right? We do a lot of planning, financial planning, and also tax planning, and that all comes together. And that'll be the last time I say that, probably till the next one. So, all right, so this one I think is a good one because it's something I'm doing a lot of right now. Maybe I should have investigated Roth IRAs prior to retirement. What are your thoughts on that?
Yes, people should. Yeah, the Roth IRA, if their income is not too high, now that's a question. If their income's too high, they can't contribute anyway. But assuming that their household income is not too high, they can contribute to a Roth IRA. They absolutely should. The benefit of, for those of the people that don't know, a Roth IRA, you put money in after tax, and you get to pull that money out in your retirement years tax free. But the tax free portion is the growth, right? Because you already put the money you deposited was after tax money, so you already pay taxes on it. But all of your growth is tax free, and that benefit is huge. And the younger you are, the more powerful that feature is. And so, particularly for young people on this, please hear that. Start that early. I wish I started mine early.
Yeah, I think this is good. Again, our difference is because, as you can tell, I'm a little bit older than Jonathan, so I have a little bit of a different perspective. But yeah, so for me, I'm going to take it in a different direction. One, I mean, everything you said is correct, right? If you're a younger investor, no question, make that an option if you can. One of the things I'm doing now, just had a meeting when I was in my Florida office 2 weeks ago, and sat down and we're looking at Roth conversions right now. That's another
Mm-hmm.
thing you can look at when it
Mm-hmm.
pertains to Roth. Now, this is where we get into our tax planning. I've got tax planning software that's awesome that allows me to put that together, map it out, see what the tax consequence is, what the effect is, what the return is on that. Because it's right, if you're going to convert, you're paying taxes in the IRA to put it into a Roth. So it comes down to time money, right? Time money value and how much time to basically break even.
Mm-hmm.
And one of the other reason we're recommending it right now is because the tax plan that was signed in during the last administration sunsets at the end of 25. So I think if you're younger, yes, do it. And if you're older, but I mean, not generally in your 70s, because if you're an RMD, if you do it, you have to do your RMD before you do a Roth. But if you're in your mid 50s to even mid 65s, there might be a case to look at a Roth conversion. So that puts us,
Mm-hmm.
wow, right at 30 minutes. That's kind of our goal each week. We could probably go longer once we build this up. But let me real quick leave it to you. Any thoughts, how to reach you, anything you'd like to add as you go forward?
I would just say that, if anyone is interested, they can reach out. My website links there. And I have all my contact information on the website as well. Um, and I enjoy talking to you as always. I think the next few weeks are going to be very, very interesting to see what happens in the market here.
Yeah, no doubt. So I'm looking out at our calendar here. Why don't we just, November the 1st would be our next show. Okay, it looks like November the 1st is the next show. For me, obviously, for those who have followed me for a while, I've got my Wealth and Wisdom TV on the 1st, right around there. So we may or may not do the show then. I'll release my month end market update. But this podcast is available on the different platforms and on my different platforms. Jonathan's going to have it on his YouTube channel, his Facebook page. And then I'll also have this available on our podcasting platforms for those who like to listen to it as they walk, jog, or whatever they like to do. So, hey, thanks everyone. Again, we're doing this. It's new. Appreciate you watching, and give us a thumbs up. Make sure you subscribe, and look forward to our next program. Take care, Jonathan.
Have a great day.